Hi everybody and welcome back to the channel, and today we're talking about CubeSmart, and this one right here, as you'll see, is paying a 3.48% dividend yield. The last dividend, or the amount that you're getting right now, is $1.72, and as you'll see, they did increase that dividend. We can start off here looking at 2021. You'll see that they went from 34 cents to 43 cents per share, and as you'll see, just going back at the history, this is a dividend growth stock. And what I mean by that is when you're looking at a stock like CubeSmart Holdings, they are basically a real estate investment trust that has rental income collected from people renting out storage units. And I actually have one of these near my house. And these types of storage units, I see them in a lot of areas around here, for example, where I live in Illinois. And as you'll see from the dividend, I mean, you can see 2 cents per share, 7 cents, all the way up now to 27 cents. And you can just see the dividend growth going all the way back those several years. So, obviously you have to look at it from a fundamental perspective, and where do you see the valuation versus what is the risk reward with a stock like this. Now, what's interesting with a stock like CubeSmart is, even though interest rates have been going up and real estate has been going down, it's starting to recover here. It got down to about $39. Interest rates, when they increase, right, that's typically bad for real estate. But the question is it already priced in? Will we see some recovery in these real estate investment trusts here? But I do have a couple articles we can go over. I just kind of wanted to show you the chart of CubeSmart and what I think personally. As you'll see, we have had this big rip up here. Could there be a dip down to 45 maybe, or 48? These runs don't last forever, right? At some point, there'll be some institutions wanting to take some profits because a lot of them bought down here in the low 30s and all that kind of stuff, or the low 40s, I mean. So that was a good buying range right there, because obviously we're up now. And that's what you have to do a lot of times. I mean, even though the stock had come down so much from 54 all the way down to a low of 38, if you were a buyer down here, you've definitely lowered your average. Even if you bought up here, you're buying all the way down. That's just how the stock market works, and that's how the institutions, drive the market up and down with their large buys and sells. But nonetheless, when you look at a stock like CubeSmart, you'll see that they did income, or trailing 12 months of income is $219.9 million, sales of $872.3 million, and then you have book value per share, cash per share, the dividend, and all that kind of stuff. And so this is a great website, FinViz.com. If you want to analyze companies and kind of look at it from a broad perspective, you can see the different numbers. You'll see that the price to earnings ratio right now is a bit pricey. So the question is 48. We're really going on funds for operations since it's a REIT. But based upon these numbers, you could look at all that. But you'll see like the forward PE ratio and stuff like that. Funds for operations, though, I'm not going to really get into that in this video. It's different than price to earnings ratio, so that might not be. I'd have to look into that further. I don't know if they're showing that accurately right now. But nonetheless, you can go to this website, check out all these different numbers. And you'll just kind of see the different numbers they're posting and everything, and just look through like the shares outstanding, how much cash per share. You can do different calculations. It's really, really helpful. Nonetheless, let's get into these articles here about CubeSmart. And let's go ahead and start off. As you'll see, this is an article, 7 rated dividend stocks to buy for the long haul. These are A-rated dividend stocks, according to the article. And we're going to scroll on down here to the one that we are interested in, which is CubeSmart Self-Storage. So current dividend yield of 3.4%. There are plenty of real estate investment trusts out there, and they have the gamut of policy. I can't talk today, folks. They run the gamut of possibilities. CubeSmart operates in the self-storage subsector. People rent out CubeSmart facilities to store the stuff in their homes and offices that don't quite fit. Why is CubeSmart a smart play these days? In any economic downturn, and there's a solid chance we're headed towards a recession, people have more of a use of temporary storage. Offices close, businesses shut down, and people downsize their living situations. That's part of the reason why Cube stock has been a steady gainer since May and is up over 20% over the last 3 months. Earnings for the second quarter were mixed. Revenue of $248.66 million, just missed analyst estimates of $248.91 million, but EPS of 26 cents was 2 cents better than what the experts called for. As a REIT, CubeSmart is always going to give you a solid dividend return. Currently, the yield is 3.4%. giving Cube stock an A rating in the dividend grader. So pretty positive outlook there on CubeSmart, I would say. If you look at this right here, you can kind of see this was interesting. People have more of a need for temporary storage as we're headed towards a recession. That's an interesting perspective. So even though interest rates are going up and that could negatively impact a stock like CubeSmart, we have seen a lot of REITs getting hammered lately in real estate in general. It's one of those things where there's higher demand potentially that can benefit the stock. And keep in mind, analysts and Wall Street are always forward looking. So they're looking at the next 3 to 6 months maybe. They're looking at the next year, the next few years here. Where's the growth going to go? Because as we've seen already, CubeSmart has done pretty well with its dividend. I mean, an annual dividend of $1.72, the dividend yield of 3.48%. But the most important thing right now is that the dividend has been growing. This has been going on for several years. That's a good sign that the company is in a position of growth. And of course, that can always change. There are things that you have to keep in mind. There's always risk with any of these stocks. But what I try to look for when I'm a dividend investor, I made a video on BTG Gold and also another one, Newmont Mining, which I explained, if gold prices do well, let's say the dollar weakens over the next 10 years, there's, in my opinion, a good chance of that happening. But if the dollar weakens relative to other currencies, as other currencies kind of have more influence in the world economy, you're going to see gold and silver go up, commodities like that, and real estate as well as a commodity. So keeping that in mind, you can keep pace with inflation with a lot of these types of plays because they are going to go up with inflation. Rent prices will go up. You're also going to have, gold and silver mining. If that goes up, you're going to have, more profits for these gold miners. And so that's what I try to look for. A lot of these commodity stocks like Cube. So, even though it's just a real estate investment trust, it's on paper. It's not like you're actually holding it in your hand, right? That's one argument I hear is, you'd rather actually own the physical property yourself. A lot of people would prefer that. Fair game, right? Nonetheless, if you're looking for exposure to real estate, a stock like, Stag Industrial, I made a video on that one. Check that out. Another real estate dividend stock I like. And then you have Cube right here, which is paying a solid dividend as well. My target yield personally is about 4%, so it comes in a little bit under what I would shoot for as a dividend investor. But 3.48%, given the dividend growth potentially that we could see in the future, I think it's fair game. And I think, even though the stock has come up a lot, you could always average down. You could always buy some here and then average down to, 46, 44 if it does come back down here. And it has been ripping lately. So just keeping that in mind, it could keep going up in the short term, but also think about the longer term perspective because I think a lot of people go into these stocks thinking it's like a quick trading thing or something. But really, a lot of the best returns can be made if you just hold these stocks through the appreciation, yes, but also the dividend growth is the main thing I try to look for. If you're consistently getting into stocks that have solid dividend growth, then you're going to be in a position over the long run to increase your passive income. And isn't that the goal, right? You want to increase the amount of passive income you have. And so even though you might have a high starting yield with some of these, if the dividend starts to go down over time, that's one risk. You might see a stock yielding like 15% versus a stock like CubeSmart is only yielding 3.48%. But if a stock's yielding 15% but can't maintain or grow the dividend over the coming years, then is that really worth it? If they're basically reducing the dividend, no, right? You want to have increasing passive income. And this is, like I said, commodities I'm bullish on over the next 5 to 10 years. So looking at this from a long-term perspective, you have a great chance here, in my personal opinion, to load up on a lot of these at a discount. You're still not over here at the peaks, all the way back up to 56. Stag Industrial, like I said, that's another one I've been looking at. I really like that stock a lot. And this one just bottomed out here as well, all the way down to 29. The yield on this one's over 4%, but it's starting to make a rebound. And that's just what happens. That's just how the market works. Isn't it interesting, how obviously it could go lower than that if we get a big market sell-off, but it's just funny how Wall Street, manipulates these stocks. The big institutions obviously are the ones who control these, the market and everything. And I just find it interesting how there's people selling Stag down here at 29 when it was actually at 47 just back in, as you can see here, beginning of the year, 47 versus all the way down to 29. Wow. And nonetheless, hope you guys enjoyed this video. Hope everything made sense. If you do have any comments or if, any questions or anything, leave them down below. And I will see you guys in the next one. Take care.